Hi guys, welcome to the Asian session. We're setting up for the Asian Open strategy, and we got our chart set up. We've identified some areas above and below where price may go. We've set the daily open in previous days, value area low and value area high, and we're going to give it a few more minutes to see where she settles in, or to see if that was our low already established. We'll just hang out for a bit and let's see what price does. The Every morning at the Asian session, basically the same thing happens. We spike to the high, spike to the low, create an initial balance range, and then we flow through the area and generally pick a direction in one side or the other. When the initial balance area is relatively small, that is all $300 or so or less, the chances of the uh, price moving outside of this range increases. And conversely, if the value area range is wide, the chances increase that she'll stay within the the initial balance area. Right now we're trading at the point of control. That's the area where the largest volume for this period and has taken place. It's where buyers are comfortable either selling or buying and feel that it's a fair price. Oh, we just hit the 15-minute mark, and I'm going to give it another minute or two. Uh, it appears that we're tagging a top here. We put some resistance created just this morning at the open. And we'll give it just one more minute, and it looks like we'll be taking an entry right here at 47,313. All right, guys, we're in the market at 47,313, and we're calling that the initial balance high. So we'll take our labeled line, place it there, and now we're looking for the initial balance low. And we have a potential target area that we set up ahead, which is this unrecovered green vector candle. This is my first recording during the Asian session open strategy. Sorry for the silence. I'm kind of focusing on the market here a little bit and see what price is going to do. And again, this is a 1 minute chart, so it should move relatively fast. And we're basically looking for price to create its initial range. We're not expecting in the first half hour to 1 hour for price to jump dramatically one direction or the other. It's the area where the traders are rebalancing their positions and getting set up for the day. And we simply want to take advantage of that range, knowing that that's what they do and that they create that range. And generally speaking, the initial balance high or low, whichever one happens first, is created within the first 15 minutes of the trading session. Technically speaking, the first hour is where the range is created. However, oftentimes that range will be created within the first half hour, which is why we look at the 15-minute candle. Boy, I wish that would stop happening. I have the screen that I'm recording on is the external monitor, and I It does that every now and then, a little bit more often than I like. It just goes black. And I think it may be my connection. I'm not sure, and I apologize for that, but I'm going to try and get that fixed because believe me, that's a lot more frustrating for me than it is for you. Uh, anyway, let's take a look at price here, see what else we can glean about price and what it may do. And some of you may be asking why we're not calling this the low and looking for a new high for the range as opposed to calling this the high and looking for a low to create the range. And basically it's timing and candle formation. While the candle formation satisfied what I'd like to see to create a low, it just wasn't enough time at this particular point. Let's see, we were just 8 minutes into the session, and generally I like to give it at least 15 minutes and sometimes a tad more, 17, 18, 20 minutes sometimes. And we look for areas of support and resistance, and we can see the areas of resistance on this. We just look left, we see that we have this ridge over here where there was inflection. Further left we see it again, and just beyond the head of whatever that was, again on the other side. So it satisfies the requirement for a resistance zone, whether it's a strong resistance or not. We don't really know, and we really don't care. I mean, if it has another area that, or if this particular area happens to be porous, so be it. It's generally a high probability trade. However, don't be ever lulled into the complacency or comfort level thinking that it's going to play out every single time in your favor. Always be prepared for it to act against what you think it's going to do, and be prepared to take action in your own best interest. And our number one rule as a trader is don't lose money. Our number two rule is go back to rule number one and don't lose money. It's fine to get out of this trade right here, right now at break even if it moves back up, or if we set a small stop, and I'm talking a very small stop because the maximum amount we're probably looking for in this trade realistically is maybe 1.25%. So market's currently trading 47.2. So we're looking for, maybe a $470, $500 move. If we're lucky, it's Saturday. We probably won't get that big of a range. And we can see a lot of oscillation around the daily open and point of control today. Actually, the point of control is acting as a overhead resistance. However, price has oscillated around the daily open, and you can see the nature of what it's doing, trying to find a range where the traders are comfortable with. That is to say, I'm comfortable taking a long or comfortable taking a short. And so the institutional traders and big money are establishing the positions in this area. They're going to create additional contracts and set their positions for either long or short, and when the range breaks, it generally picks that direction for the day. Again, these are general rules. There are other formations. Oftentimes you'll see it just crack the initial balance high and then crack the low again. That is, break those levels and spike to the outside of it and come back and close inside, then travel to the other side of that range. It's very typical, and this is why very oftentimes after our first trade, which is still open right now waiting for a low to establish, this is why oftentimes when we get to that point and close this trade, we'll find a potential setup to close that trade and reverse our position in the other direction. And our initial target generally is going to be, for example, in this case, if we come down to our vector candle recovery zone on the bottom, I'm suspect that we would have some red candles printing into that area, and find support area, if we can get the RSI down there at the same time and meet some of the criteria we like to have for our normal trading, that is outside of our morning session, well then, we want to take that trade. And if we can get 2 trades off in the morning within the first hour, the first one should be complete, and oftentimes very much sooner. And if we're lucky enough to get a second trade off at the end of that hour, looking to trade back into the range, well then we're looking at maybe another, oftentimes less than an hour on that trade. So the first 2 hours of the morning, we could have our day done. You'll find that these trades are reliable, and you'll wind up with a comfort level that will allow you to increase your leverage amount, where you can really take full advantage of these trades to where you really don't even need to trade the rest of the day. Go off and do whatever it is you want to do. Spend time with the family, go to your other job, go to the gym, get a canoe, whatever. Of course, and if you are a trader, you're not doing that. You're going to stay in front of the screen and look for your next trade. And fair enough. However, the way we've placed ourselves with this morning trade is that we're a lot more relaxed. We're not making decisions under duress. That's assuming that we close this trade in profit, and I don't know that we're going to do that yet. However, let's assume that we do. Well, we've banked our first trade, and it's psychologically healthy. And in fact, more often times than not, you'll have to resist the feelings of euphoria, and don't think that you were a genius or that you've conquered the market. You're simply taking advantage of a pattern that repeats itself and has a high probability. So during the rest of the day, we're going to be looking for our setups that will produce asymmetrical style trade. That is where we're looking for liquidity zones to develop throughout the day, and look for an entry at a key level of support or resistance and trade back to that liquidity zone. Really what we're looking at there, the liquidity areas, okay, represent a gap in liquidity, if you will, similar to the gap on the futures exchange, the CME futures. Those gaps are created as a result of anomalies and atypical behavior by the market participants, and in this case, the larger players, the institutional players, the whales, the big money. Those are the ones that move the market. We're simply looking to follow what they're doing, try and follow their footsteps, and take advantage of that behavior. So when we see a liquidity zone create and it moves, price has moved away from the value area, or moved away from any indicator that you're comfortable with, that suggests that should be the average, or that should be the area where traders are comfortable. A simple moving average, a 50 EMA, exponential moving average, 200, or the combination of both of them. Oftentimes I use them and have them on my chart, and I don't appear to have that right now. And I'm not really looking to change my setup to get that. I don't need it. It's not part of the strategy. It wouldn't hurt. It may create, I may have a confluence of a 200 or 50 down in this area, which would give me a little bit more confidence to sit in this trade and see if we could make our way to that area. Let's measure that off, by the way, while we're looking at that, and see what that is, and see if that falls in the typical range area of what the initial balance range creates. And yeah, it actually would be tight. If we made it to the bottom of the zone, we're looking at about $300. Uh, and again, a very, very decent and acceptable trade. We really haven't taken any heat on this trade yet, and hopefully we won't have to. The RSI is continue to make its way down to the lower end of its range down here. Whoop, let's get rid of that. Down in this area, when we opened the trade, we were oscillating around the 50 line. Boy, is that frustrating to see that screen go black like that. I'm sure it's my connection. I think I got some type of off-market adapter on my cable that runs to my Mac and connects to my external monitor. And it seems like anytime the wind blows, it'll move it just enough to. I try to manually put it in with my hand a little tighter, and it appears to wiggle a little bit and have a little bit of room. Anyway, I digress. We see that the point of control just moved. When we entered this trade, it was up at the area that we entered. So, and now we've just moved. And you're going to see that throughout the day. The point of control is going to move to wherever the traders become involved in the market. And right now, the larger players are saying that this is an area that they're comfortable at, this 47,200. And if you look back, I remember, especially from yesterday's session and the prior days, it was a typical area, 47.2. We're going to break 47.2. I don't know, 47.2, here it comes. Anyway, it's a number that sticks in my head, and I'm not surprised that we've seen other traders feel the same way. And they moved in at that area. They're starting to build positions and balance out their books, close positions, and build new positions. So let's see if this holds as support or if we're going to continue to the downside. I'm sorry, excuse me. We see the RSI is curled up a bit here. So it wouldn't be uncommon for the RSI to come back to the underside of the 50 that we've just recently broke through, hesitate a while, and then we continue on down to the downside and to find the lower end of its range and create the initial balance low at that time. Let's see how she turns out. Whatever she does at this point, guys, okay, your trade at this time should be either in at break even or slightly into profit. Okay? We're not looking to be greedy here or looking to say that we're right, we know what the market's going to do. We don't. Okay? We simply have a probability in our favor. So we entered we have a good entry right at the top, 47,313 I think was our entry, and it looks like the IB high, and I have this marked wrong. I have it marked as the low. Let's move that down here and hold it in abeyance there for a while until we find that low. And where is our, here it is. I have them the same color, and if I don't look at it, when I drop down to this 1 minute chart, the entire environment really changes up on you. Well, it looks like a big move. You go back up to even just a 15-minute chart, and you can hardly find the move. Anyway, let's open this back up. Well, okay, we've just bounced. We bounced off the point of control, and I was just about to say it was creating a green candle, which is good for our short trade because that would suggest that we're going to come back down and recover that green. It didn't stay green very long. 2 candles, 2 minutes, and the second minute, within that minute itself, it recovered that liquidity. So again, it's big money moving around when we see these colored candles. These colored candles represent the green candles and the red candles represent a 200% increase in volume over the average of the preceding 10 candles on the same time frame. It's not normal. It's outside outside the normal activity of what you see most of the time, and oftentimes because of that is why price recovers to it. And a relatively strong move can turn around on a dime sharply and recover it just as it did there. Although this is a 1 minute chart, you'll see similar type price action on your 15, 5, and smaller time frame charts. Anyway, we're at 7:30 now, and I'm looking for a little bit lower low here. We really haven't expanded this range very much. Uh, Typically, we're looking for a even a 500, and of course, it can be bigger, $600, $700 range. But typically, a $400 or $500 range is what I've noticed more recently, given the current environment and where we are. If you guys were tracking the market last night, it really didn't do very much. It stayed inside a tight range, and uh, I'm of the feeling, and as you know, if you take a look at the charts that I posted, that we have one more push to the upside from an Elliott wave perspective, and even from a market profile perspective. What the market players, the market makers, what they like to do, the psychology is to, in creating these vector candles and exercising their uh, 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 monetary might, if you will, and trying to induce traders to feel that the market's going in a direction opposite of where they want to actually take it. We have to rewire our minds when we trade and resist those urges. And the PVA candles, that is the indicator that creates this color scheme for us and helps us identify where those surges and where that volume increase comes from, is the PVA indicator. You can see here on the bottom of my chart, it's labeled PVA. We can go in and change the settings. We can hide it if we want, or delete it, or we have more options here if we wanted to set an alarm or something of that nature. I have a link for that indicator on the Discord channel under indicators. I think I just created that channel last night. I think I had it on some of the location. At any rate, it's there, and it's a principal element of our trade strategy, and extremely useful. Other indicators are listed there as well. I have a exponential moving average ribbon that I like to use. I'll bring it up now for you because I do happen to have it on the chart. Ah, boy. Let's see if the screen comes back. There we go. And you can see our ribbon there. And the two averages that I'm looking at here is the 50 and the 200. The 200 is the yellow, and the 50 is the white. The green and red band on either side are smaller averages. I think the smallest I have on this is the 21, and then I move up towards that 50. And so as the smalling moving averages crosses that 50, it'll change color. And so it gives us a nice visual effect to kind of get a feel for what the market may be doing right now. And this is somewhat encouraging for us because it just turned red. The smaller exponential moving averages have all just crossed to 50, suggesting a bearish continuation. And the white is pointing down towards the 200, suggesting a death cross there. And I hate that name, death cross. It suggests like the market, the sky's going to fall down. It's simply acknowledging a range-bound activity, in my opinion. And you can see here as you look left that moving average is simply oscillating above and below the 200. A moving market would move away from those averages, creating a divergence between the two averages as they move apart from each other, and that would be more indicative of a trending market. So again, we're looking to take advantage of sideways movement, because 90% of the time the market is doing just that, moving sideways. It's a somewhat of a boring profession, activity. hobby, whatever it is for you, because 90% of the time it's moving sideways in a very very quiet fashion, if you will. Uh, I was looking for another word there. It escaped me. I couldn't think of it. Still can't think of it. But you get my point. So and when that big move does happen, well, hell, that can scare the shit out of you. Wondering what it's going to do, and so they're difficult as well. So to come up with strategies that take advantage of more typical type price action, where it moves in a little bit slower fashion, and a I hate to use this word, but a more predictable fashion. Uh, and if we can get comfortable in repeating the same thing, we're not looking to master the market here. We're simply looking to master this particular trade. I want to repeat this trade as often as I can. I rather do one trade successfully 1,000 times than to learn 1,000 different trade setups one time each. We're not our last trade. We are our last 1,000 trades. And so if we could have employ good risk management and keep ourselves out of trouble, uh, the winners will take care of themselves. Our job is as a goalie, if you will, on a soccer field, on the football field. Uh, it's not his job to score. His job is to make sure the other team doesn't score against him. His job is boring probably most of the time when the ball is down at the other end of the field, like it is right now for us in this market. Our goalie's sitting up there at break even, and probably a good point now that we've broken key level and gotten a level of comfort that we're going to continue moving down here to move it into profit, and probably just above the daily open here. And from a psychological standpoint, sit back and sip your coffee. There's no way you could lose on this trade right now. Okay, and that's fine with me. Whether it gets to a profit target and we're able to successfully execute at that point, well, time will tell. We're at 741 right now. RSI on 1 minute is approaching its lower edge and starting to curl. Uh, I would prefer to sit in this a tad longer, especially with the moving averages suggesting we're going to cross to the downside here. And to the extent that the range hasn't expanded to what it normally does. And again, that normal changes. You have to keep your thumb on the pulse and take a look at where we are in the bigger scope. Where is the market structure, and what are we looking to do? And if you've been tracking the market and tracking my posts, you know that I think we've made a major turn up at that 53,000 area, and that we're looking to move down somewhere in the mid-20s. And that we haven't got confirmation, price confirmation or structural confirmation that that's the case. We could still move back up and break 53. And it wouldn't surprise me at all. Uh, and if we don't get price confirmation, that is a five-wave decline, a bearish five-wave decline from a daily chart, if you will. Right now, all we have are three waves, and so we would need to break our. If at a bare minimum, I'm looking for it to move in that direction, either in five-wave bearish impulse, or a looking lower under a ABC corrective structure, if you adhere to the policy that the market is still moving up under a bullish formation. And there are valid arguments on both sides of the equation there. And that's always the case. That's what makes the market. If everyone thought the same thing, I guess, we just have a static price. And so here we are, we jump into the fray and pit our discipline and resolve against that of less experienced traders. And again, we're not looking to conquer the market or ride the whale. We're simply looking to find out what he's doing and see if we can tag along for a bit. Anyway, we're approaching the 745 mark and price continuing to move down. The RSI continuing to extend itself to its lower end of its range. And so far, so good, as the man said, passing the 13th floor after jumping off the building. Anyway, it's important here, while we have a lot of comfort right now, because we've moved our stop loss to break even and or into profit. And again, these are trade styles that, yeah, everyone has a different trading fingerprint. They have a different psychology, a different emotional attachment to their money, a different level of risk, a different comfort zone. And it comes about as a result of a lot of different things. And a lot of external factors come into play into how we trade and how we feel uh, about the market and what we feel we need to do. Having a good plan in advance goes a long way to helping resolve some of those issues when we're in a trade. When you enter a trade, now we're moving back up. Just wanted to point this out. We're moved up, and this is a blue candle, not a green one. It just turned green. The blues represent a 150% increase over the prior 10 candles average. Anyway, I don't mind seeing this candle move up towards its moving average and the point of control, especially that it's printing a green candle. Why is that? Because that green wants to be recovered to the downside. So it may recover within the candle it's forming, the next candle, or the next 2 or 3 candles. We can see the RSI has come off its bottom, come up to meet the 50 center line again, and needs to make a decision. Let's take a look again. I think I was going to do this before and I didn't do it. What the established range is so far. And we have a initial balance high at the 47,315-ish area. I guess I'll home in and find exactly what that is. And the low so far, we're a $211 range, or just a little less than half of 1%. So I would like to see that range expand a little bit and sit through this trade and see if we can get something more typical range expansion. Now we have a candle that just recovered that green vector. Unfortunately, it's printing violet or pink, which is the opposite of what a blue candle is, and so we would look for that to recover as well. But if it doesn't recover by the time we get to that lower range, or I say the lower range, or target zone, this green vector. If this candle doesn't recover, I'd be quick to take profit there, because that's suggesting that unrecovered candle printing a color like that would suggest that we're going to go back up. So I wouldn't even mind seeing another red candle print as we come into our zone, and see the RSI come down into the lower end of its range, and preferably even into oversold territory below the 30 level. Boom, there we go. Gentlemen, we're taking that trade. I'm out of the market, and I'm going to sit and wait a minute. And let's see what that was. 47,043. Let's mark that down. Now, this very well may move lower. I don't care. I don't care what it does. My trade is done. I've made money. I'm banking that, putting that away. I'm going to sit down, relax, and see if we could find some additional trades. It's probably a good area. Had I been quick enough, it was a little too fast when we could have taken another trade right there. As I mentioned in advance, it was probably going to happen quickly, and probably within a minute or two of going to that area, suggesting how we'd like to see that red vector as we approach that area. RSI was down at the lower end of its range. It didn't go into oversold. But again, if you'd like to get back in this trade, this is the area to do it right now. We've printed a green vector. This is not part of our strategy, and I'm not doing this, okay? However, I just wanted to talk about while we have it here in front of us, these candles and what they represent. And it's the market maker now uh, trying to get the retail trader on the wrong footing. He wants to get him off balance. He wants to go, oh no, I'm wrong, I'm short, let me get out, go long. Oh no, I'm wrong, let me get out, go short. And they'll just sit there and pick them dry all day long until they don't have any more money and they can't trade anymore. So again, I have no pride here at all about being right or wrong or where it's going. I'm very happy that I got a book trade here, and we'll tally that up in a minute. Let's take a look, in fact, right now. Uh, $270 at whatever leverage you trade at. Boom, you're done for the day. If you're trading at a conservative 5x, well, you're looking at $1,200 for the day, the open morning trade. Uh, uh, you could call it quits and wait till tomorrow for the next high probability Asian morning open. All right, guys, I'm going to sign off here. We have about 10 more minutes in the session, and I'm suspect that we've created an initial balance slow. Let me move my horizontal line up to that level. What other house maintenance items do we need to do here? Looks like price is going to move up and tag that 50 and the 200. We've just crossed, by the way, that death cross. Nothing dying about it. It's simply a cross of two moving averages. They come up with that term from the traders on larger time frame. It's really not applicable term here on this 1 minute chart. It's typically referred to as a death cross or a golden cross on the daily time frame. And the theory is that if a golden cross, that is the 50 EMA moving above the 200 EMA, suggesting a bullish formation and continued bullish price action. And the converse, if the 50 crosses the 200 to the downside, they call it a death cross. I'm not of that opinion. I don't like using moving averages so much that way. But fair enough. They're there on the chart. Other traders look at it and react to it. So we have the RSI at the 50 area is stalling as we approach the point of control, the 50 EMA and 200 EMA sitting all in the same area. And price more than likely is going to travel within this range. Had we taken that long, by the way, at the bottom, let's say we had a limit order set and we didn't have to act. I didn't have a limit order because I didn't know where price was going, if it was going lower. So I don't like to set limit orders on my Asian Open strategy. However, let's say we did get in there, okay? You were quick enough to get that, which I'm not sure how you do that. Or you had the limit and you got in. I'd be worried right now, okay, if I was long, because of the green vector candle just below us. It's more than likely going to take us back to that area, to our entry, and change our psychological makeup as it does that. Okay, that's, I just rather not sit through that. Okay, so I'm not at all unhappy that we missed it, and I'm not at all convinced that I necessarily wanted to take it. Although if you look left, you could see it's an area of support. We have an inflection here, 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 and here. And this is just a 1 minute chart. If we were to go back further, we'll find other areas of support. And anybody who's been following the market recently in my charts could see that this 4,700 area is the lower end of the range. We just popped it last night for the first time, and I'm not sure how long, quite a bit. And it was we made a new low down here at 46,750. Prior to that, it was the 47 area, and more specifically 47.2. So uh, a good key area to get out. So all you guys who took this trade, congratulations to you. Good trading, nice exercise of discipline, and not being greedy. Uh, we'll take what the market gives us. I can't make the market, we can't make the market do anything at all. The only thing we can control in this environment is what we do. So if we're prepared and have a plan of action ready, knowing what it is that we may anticipate and having a plan for that. All right, guys, this is coming up to the end of the hour here, and I think I've done everything I wanted to do to demonstrate this particular setup and how it played out. So, all right, guys, listen. Congrats again, good trading, and enjoy the rest of the day. I'll update the charts if I see anything posting. It's a Saturday morning here for me. I'm in Asia, Southeast Asia, and it's a family day. My screens aren't shut down. I'm always looking at it, but my son gets together with one of his classmates, and they play Minecraft, and I'm trying to teach him to read the charts just the exact same way they play Minecraft. So anyway, guys, I'm looking forward to having some fun, and you guys have a great day, and we'll talk to you later on.